Why I like duopolies and oligopolies. The reason for me is because there's more room to be rational in the market when you have a limited number of competitors at a large scale, particularly if they've become more mature, they're not fighting for market share, rather than an environment where it's a free-for-all market share land grab, because eventually what happens is a lot of investors basically funnel money into these companies knowing that there's growth opportunity, and then a lot of them just burn through cash to take as much market share as possible. The reason why I particularly like duopolies and oligopolies is because they're more concentrated and it's easier to understand, particularly if a lot of these companies are public, but you could also understand if they're private as well, sort of what the objective is for each company. So by studying all the companies within that market, say there's 6 players in that market, 4 or 5 of them are publicly traded, you can then sort of look at their earnings calls, understand their balance sheet, management sort of behavior, and get a feel for what's their aim at the current stage. Is it to grow market share at all costs? Is it actually we're going to grow profitably, which is code for we're going to play this rationally and not burn shareholders' money at any cost, and actually pay off the debt on the balance sheet that they might have occurred earlier from having to fight and grab as much market share as possible, to now sort of right size the company and bring the balance sheet back into a healthy position for them to ultimately survive. And is there sort of some mutual agreement, not an agreement in place, but rather mutual understanding between all the players in the market, or the majority of the players in the market? Because if it only takes 1 or 2 massive players to start competing on price before the others notice the impacts on their revenues and so forth, and then they're forced to take part, or a lot of them will take part and succumb to taking part of this sort of bidding war, which ultimately means that shareholders just get screwed in the long term, as basically they receive no reward for all the risk they've taken on, if the companies aren't able to sustainably remain profitable. So I will caution by saying that I don't like all duopolies and oligopolies for that reason, but there's a reason that I significantly prefer these and see it as a plus generally, only if it meets those criteria. So again, I like duopolies and oligopolies only if it meets that criteria of having rational players who are heavily incentivized to bring the company to profitability. That could be investors' sort of targets and investor pressure. It could be the fact that they've got a ticking time bomb, which is a lot of debt on their balance sheets. It could be the fact that their bonus and incentive structure is tied to profitability rather than revenue growth. So it all really depends. And also sort of what the management team is like. Are they trying to empire build, or are they thinking of sustainably running this business going forwards? Again, that all plays into account. And the reason I specifically said duopolies and oligopolies rather than monopolies, which is something you might be thinking, well, why wouldn't a monopoly be better because you can control it? They can control everything. The problem with that I see a lot of the time is, and rightly so to an extent, is that oftentimes monopolies can be interrupted and disrupted. And again, it's because of the fact that governments might not be comfortable with this monopoly unless there's a very strategic reason behind as to why it's monopoly. It could be like a national safety concern, or it could be a key resource that everyone needs, so they want it tightly regulated and so forth, and that's different, and that would be attractive. But what I'm getting at is, if you get to a stage where you've only got one player controlling the vast majority of the market, particularly if it starts to become common knowledge, that can often raise flags, and you can often see a lot of government officials starting to question what's going on here, and rightly so to an extent. Again, it depends what they're doing in their position. Are they sort of resting on their laurels and doing nothing? And that can often lead to them getting broken up or actually not performing as well. Again, it's all very situation dependent, but there is that added risk there. Whereas duopolies and oligopolies, if you play it right and it's the right scenario, right situation, where generally all the players are starting to rationalise, and it can have the same effect without that risk of being broken up. And also, to an extent, oligopolies are only going to grow as fast as the market. Yeah. a good story, I think, that sort of breaks this out really well is Mohnish Pabrai, a famous investor. He is speaking with one of the executives at Samsung, and he's sort of asking them about, well, why don't you want to buy out? This is it. Sorry, this is in the storage market that Samsung is a part of. There's three players, and Micron is one of the other three players. And he goes from, well, Micron's a much smaller player. Couldn't you and this other bigger player basically squeeze Micron out of the market? You two have the financial backing and the financial power. And I think this sentence from the Samsung executive sums it up really well, which is bad things happen to us when we're 50% of the market. And what he's getting at here is that, government and officials realize there's actually a need to break this up because 50% is too much control, too reliant on one company. Whereas, when there's a few more players, it's a bit different. So I think particularly that's what I mean by players are rational. If they start to realize that, and if they are rational about it, like Samsung was in the memory market, and Micron was as well, you will see actually very good things can happen there from an investor's perspective. There's a reason why sort of Micron did very well in that sort of period as well. Again, it really depends on the environment, and particularly if they're public companies, you can quite easily assess sort of what's going on there. But in general, that's why I like duopolies and oligopolies, assuming that it's playing out in the right scenario. I mean, monopolies under certain conditions can be excellent. I mean, particularly it can be like an impenetrable moat. Particularly, like we say, if there's management are proactive, they're not resting on their laurels. The value they provide is actually fair. Because I mean, even if you're the number one player and you've got a grip on everything, if your service is that bad, eventually something, in my opinion, I wouldn't be comfortable with that risk because eventually something could come out there, disrupt it, or there could be something that comes in the way if there's potential for a significantly better offering. Now, if they're still on top of it and they're doing really well and they're a monopoly, then there is room just to stay. There isn't much room, in my opinion, for it to see a play that's massively better. But if management is still, sharp and basically not getting fat and happy, or what's that saying, where you get comfortable and lazy. Again, and if it's in a regulated industry, I think another really good segment could be like the airline parts industry, highly regulated industry. Obviously, massive consequences if anything was to go wrong. So very difficult to get any permitting, any approval, years and years of rigorous testing, and rightly so, right? The consequences could be huge. But that means once you've got that stage and that you've got those approvals, actually there's not going to be many other people who can get past that, and that in itself will act as your moat. You have pricing power there. And there's a reason behind as to why you don't want too many players entering that market. So hope that gives you some perspective. Again, I like to look for these type of markets. If you've got any questions, let me know.